Cathie Wood has dropped a bombshell on what will become the world's largest industry, which isn't electric vehicles or solar panels. It's something far more significant. This industry's prices are falling at a rate of 68% every year. Nothing can even come close to the industry that Cathie is describing. This video will go through why the sector is so bullish, as explained by Cathie Wood herself, and how investors can profit from the trend. Stick until the end of the video to find out. But before we begin, make sure to keep yourself informed and engaged by subscribing to the channel and turning on all notifications so you won't miss our latest uploads. Energy storage, artificial intelligence, robotics, genome sequencing, and blockchain technology are the 5 innovation platforms that ARK Invest works on primarily. Take a guess which one will increase in value by over 1,000 times in the following 10 years. That's right, it's artificial intelligence. Although AI may appear to be a trend, the sector is on the verge of delivering huge societal benefits. Believe me, ladies and gentlemen, this is amazing. Between 1960 and 2010, computation times doubled in speed every 2 years. The trajectory has shifted dramatically in the last decade. Computing times are presently increasing at a 10-fold annual rate. At this rate, computing times will be 100 times faster than they are now in the next 10 years if this trend continues. This is revolutionary because it allows AI to improve at a rapid speed and at cheap rates. Classifying 1 billion photos, for example, has dropped from $10,000 in 2017 to just 3 cents today. That level of exponential decline is unsurpassed in the industry. AI will be able to compute more and more complicated tasks as training costs for AI decrease over time. AI performance has improved 16 times in power over the last 3 decades. That's according to Stanford's deep learning benchmark. Energy storage, autonomous driving, genome sequencing, healthcare, supply chain management, virtual assistants, blockchain technology, and so on will all benefit from AI's advancement. Over time, this will have a severe deflationary effect on the economy. Cathie Wood, speaking at the Milken Institute's Global Conference in 2021, pointed out that the cost of artificial intelligence training is dropping by 68% every year. This decline astounds her because she has never seen anything like it. Furthermore, AI is igniting a technological arms race between organizations with the largest and highest quality data pools. In the genomic space, the best AI knowledge is combined with the best domain expertise. Artificial intelligence allows machines to train themselves using this type of data. Furthermore, the cost of training is decreasing at a rate of 68% every year. As a result, AI will be a part of every business, and that isn't the only industry with similar characteristics. DNA sequencing, robotics, and blockchain are all showing signs of deflation. It has been steadily improving in recent years and is now eliminating all middlemen from the sector. Companies that haven't invested enough in innovation will be harmed as a result of this. Companies that have leverage to meet short-term oriented shareholders want their profits now, thinking about dividends, and companies that are not thinking long-term. Within 10 years, ARK Invest predicted that AI would generate $30 trillion in market value. The thing is, the firm's forecast was recently revised to $80 trillion. That's right, 80 trillion, a significant rise of tens of billions of dollars over the current market value. So, how did ARK Invest come up with this forecast? And why did it jump by such a significant margin? AI is used in nearly every industry, which is one of the key causes for such a large increase. Verge Genomics, for example, has released a drug development machine learning algorithm. Microsoft has been working on a blockchain-based AI model so that anyone can create models based on blockchain data. More importantly, the race to full self-driving is significantly accelerated. With fresh versions, Tesla's revolutionary autopilot technology is continually developing and will soon be ready for a full development. Waymo has also been working hard to bring LiDAR-powered complete self-driving vehicles to the market. With AI training costs falling at an exponential rate, it's hardly a stretch to predict that full self-driving will be possible within the next 5 years. Transportation is one of the world's major markets. Complete autonomy will expand it even more by cutting transportation costs and enhancing convenience. Cathie and ARK Invest predicted that artificial intelligence will provide a $30 trillion market value opportunity in the corporate software area in the next 10 years, up from tens of billions currently. The new figure, as I mentioned earlier, is $80 trillion. This is why Cathie Wood believes AI is the next big thing. However, it's the use of AI in transportation, such as self-driving taxis, autonomous trucks, drones, genomics, and so on, that makes it big. As a result, these platforms will come to life and evolve much more quickly than we ever imagined. So, now that we know AI will be hugely disruptive in the industry, you might be asking how investors might profit from this developing trend. You might be astonished to learn that the first method is to invest in big pharma and biotech. Cathie prefers to invest in fast-growing businesses with high valuations that have long-term potential. Contrary to popular belief, big pharma and biotech provide a once-in-a-lifetime opportunity to profit from massive upside potential with little to no risk. Pfizer is a good illustration of this, with a trailing P/E ratio of 18 and a forward P/E ratio of merely 10. The company also has a 3.6% dividend yield, similar to that of a value investor. Cathie purchased Pfizer in late 2020 to obtain exposure to the pharmaceutical industry's next golden age. The 1950s were considered to be the first pharmaceuticals' golden age, with numerous medical discoveries in surgery, drug development, and immunizations. In 1955, for example, a polio vaccine experiment revealed that the vaccine was safe, productive, and potent. This was a huge step forward at the time, and we may be entering the second golden era of pharmaceuticals. The convergence of AI and genomics will lead to the modern version. Breakthroughs in genomics will hasten drug development while also cutting costs. Cathie and ARK Invest are particularly interested in firms that are beginning to embrace the convergence of DNA sequencing, AI, CRISPR gene editing, and gene therapies in general. This is because over the last 20 years, the returns on their R&D spending have decreased from 20% to 7%. Cathie believes that in the future, trial failures will be reduced thanks to artificial intelligence. A decrease of at least 25%, if not more, will be achieved. The Autonomous Technology and Robotics ETF, which trades under the ticker name ARKQ, is another practical way to invest in AI. Tesla is the top holding in ARKQ, which is unsurprising. Tesla is leading the charge towards full self-driving technology, which has the potential to release trillions of dollars in value. The firm is also at the forefront of AI training. The Dojo supercomputer, the world's most powerful AI training machine, was recently announced by Tesla. A Dojo D1, an extraordinary processor with revolutionary performance specs, is the ultimate secret sauce. The Dojo D1 is light years ahead of its rivals. Tesla will use millions of hours of camera footage to teach autopilot the AI with this processor. At the same time, Trimble is ARK's second largest position in ARKQ. This prominent AI startup uses physical equipment such as GPS, lasers, and optical attachments to assist companies in collecting and analyzing data. Trimble's rail management system is an excellent example of this. Trimble has connected train devices to manage massive volumes of data. This information aids railway businesses in improving reliability and maintenance. In fact, Trimble is already an S&P 500 company that has shown to be successful and growing. The company's stock now has a trailing P/E ratio of 41 and a forward P/E ratio of 28. On the other hand, Trimble has consistently increased in income by 5 to 15% per year. UiPath is another of ARK's most important AI sources. This firm is working on an AI model that simulates online manual labor. UiPath's revenue data grows at a pace of 60 to 100% each year, in contrast to Trimble's modest growth. The artificial intelligence workforce has enormous promise in the future, with training expenses reducing at a rate of 68% every year. Regardless of your investment style, there are several methods for you and me to invest in AI. First is FANG, or Facebook, Apple, Amazon, Netflix, and Google. Unity Technologies, Palantir, John Deere, Baidu, Alibaba, Tencent, and others are more AI businesses worth looking into. Please let me know if you're considering to add artificial intelligence to your portfolio. That's it for today's video, guys. Thank you so much for watching. If you like this video, hit the notification bell and turn on all notifications so you can stay up to date with our latest uploads. See you guys in the next one, and remember, Keep living life bullish.